UiPath reported their latest quarterly figures Thursday after the market closed, and it was a beat across the board. They beat market estimates for the quarter and for guidance as well. So that's all great. Remember last quarter, CEO stepping down, founder comes in and takes the place of the CEO. So complete little refresh. Of course, the market doesn't like uncertainty, and that's why we've seen that huge drop previously, so 3 months ago. Right now, at the time of making this video, stock is up around 9%. Of course, when the market opens, it can go up or down. Currently, it has a market cap of around $7.5 billion and a forward PE of 35 times. Now, as we know, well, we can clearly see this here. Year to date, the stock has not performed well, to put it lightly, down close to 50%. Now, this might not be your high growth company anymore because it's expected to grow only 7.8% in fiscal year 2025, 11 to 12% in fiscal year 26 and 2027. Bottom line is expected to grow a little bit faster in 26 and 27, but it's expected to be down 30% in fiscal year 2025. Now with UiPath, of course, the main, let's say, bearish point is that, well, it's a small company. Why wouldn't a bigger company do exactly the same thing and then take all the market? Well, it's a good point. I mean, they are working with the big guys as well, with Microsoft, with SAP. So they've been around for a couple of years, and yet they're still dominant in that market. Now, of course, with the rise of AI, LLMs, chatbots, co-pilots, you name it, maybe in the future it's going to be a problem. Or on the contrary, maybe it's going to help them become an even better company, being even better product. Time will tell, but so far I think it's a company that's operating quite well. Cash from operations is positive, free cash flow positive, they're buying back share as well to tackle the dilution problem. So, I mean, I've seen worse companies out there. Plus, they're operating in a market that is expected to grow quite fast. The robotics, in this case just the US robotic process automation market, is expected to grow 39.6% from 2023 to 2030. And so if they are, let's say, one of the dominant players in that market, I think they'll do fine. But then again, execution is key. And yes, maybe previously they did not execute correctly, and that's why the stock is down 50%, maybe even more in the last couple of years. Could have done much better, could have been a bigger company as well. Okay, all those points are valid. But now we are here today, we are in September, new CEO, let's see what he can do with this company. And by the way, I mean, worst comes to worst, maybe they'll get acquired by one of the big guys. Could happen, right? When you're worth less than $10 billion, you could get acquired by plenty of software companies. So remains to be seen what happens with that. Before jumping into the report, if you enjoy this type of videos, leave it a thumbs up, subscribe. If not, we really appreciate that. If you want to support me even further, do check out the link down in the description and a pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Alright, so let's start with a couple of comments. We are pleased with our second quarter results, with ARR growing 19% year over year, a testament to the team's improved execution and the compelling value to our AI-powered automation platform delivers to our customers. Our conversations with customers and partners deepen our conviction that there is an increasing need for AI and automation, and our unwavering commitment to innovation continues to position us as the automation platform of choice for capturing the opportunities that AI brings to an enterprise. As we look to the remainder of the year, we will continue to focus on product innovation, customer centricity, and driving operational efficiencies across the business. As for the CFO, who by the way is now also the COO, we deliver durable growth at scale while driving disciplined decision-making, enabling us to raise our profitability guidance for the full year. We are pleased to announce the board has authorized a $500 million expansion of our share repurchase program, underscoring our improved non-GAAP adjusted free cash flow profile, our confidence in our strategy, and our commitment to deliver long-term shareholder value, which means right now they have up to $554 million of outstanding share, what they can buy up to that amount. Cash equivalents, and marketable securities were also $1.7 billion, so they're quite in a healthy position. Now, as for revenue, it came in at $316 million, up 10% year over year, but it's down quarter over quarter. Q4 is usually their strongest quarter, then it goes down Q1, down another Q2, then Q3 starts to reaccelerate. ARR came in at $1.55 billion. ARR growth rate year over year sits at 19%. Non-GAAP operating income $6 million, and non-GAAP adjusted free cash flow of $49 million. Dollar-based net retention rate sits at 115%, and cloud ARR growth rate year over year is over 65%. Now, with regards to dollar-based net retention rate, as you can see here, it has come down quite fast for the last couple of years or so. It's still at 115%, which is of course 15% higher than the 100 one, so that's still okay. But you would like to see it bottom sooner rather than later. As for margins for the quarter, well, it's down year over year. It's now at 80% compared to 83%. You can also see we can see GAAP operating expenses have increased year over year as well. So that did not help GAAP operating loss, which sits at $103.3 million. GAAP net cash provided by operating activities is up a little bit year over year. That came in at $46.4 million. And as for Q3 guidance, they expect revenue to come between $345 to $350 million, which is of course close to 10% growth quarter over quarter, ARR of around $1.6 billion, and non-GAAP operating income of around $27 million, which again, like I said at the start of this video, beat the market's expectations. For the full year 2025 guidance, they expect revenue to come between $1.4 and $1.425 billion, also beating the expectations, and ARR of between $1.665 and $1.67 billion, with non-GAAP operating income of around $170 million. The CEO did say one interesting thing, that's with regards to the FedRAMP authorization. He says here, "I think this is going to accelerate our business in public sector. We also are looking forward to take the lessons learned while building FedRAMP into other countries and territories and power more of our public sector business. So I think long term we are seeing an increase of the percentage of revenue in our company coming from the public sector for sure. And as you know, there's a lot of money to be made there. There's a lot of money to be made there, and there's a lot of improvements, technological improvements to be made in the public sector as well. And here it's very important to note that it says in other countries and territories, so expanding outside of the United States. And so right now, looking at the stock, quick update from the video that I made, I think a week or two ago. So it does seem like this area right here at around $10 or so was a nice little bottom, little rebound here of already around, 35% or so. Before the reported earnings, we were sitting just above the 50-day moving average. Now we're going to sit well above that, but still far away from the 200-day one, which sits at $16.39. RSI is going to be neutral when the market opens. Of course, if the market opens and the stock is up 9%. Otherwise, RSI is low, but there is definitely good momentum with the stock right now. From a more short-term perspective, yes, this point right here at around $13.30 or so, that could be a local resistance, a small resistance here, but since we're going to open above that, let's try and end the week with a big green candle. Now, of course, if we look at the daily, you can see there is, of course, that huge gap from 3 months ago from the last earnings report. And of course, we know if we're expected to go on the way up, well, that huge gap will be filled. When will that happen? I don't know. I think it's going to take quite a while, but yeah, on the daily, there's a huge gap here between $12.62 and $18.12, which of course would mean that we're going to go above that 200-day moving average. And if we continue like this, if we continue with green candles, RSI might be overbought in the next couple of weeks. But again, a lot can change in the next couple of weeks. So don't really focus on that. Focus on the business health, the business execution for the long run. That's the most important part, right? Good quarter, good guidance as well so far. Now execution is key. New CEO, CFO is now also COO. So yeah, we'll see what happens in the next 3 months, 6 months. I think it's an interesting company. Me personally, I'm not owning it. I'm not going to own it either. Maybe for some trades, etc. Because trading wise, I think could have made some money on it for sure. But yeah, some question marks remain, especially with the rise of AI, big tech companies becoming more and more powerful. We'll see what happens. Definitely a good company, healthy company as well. That's just my thoughts. Of course, do share yours down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.